Mortgage rates are on the move again, with some lenders pushing rates up, whilst others cut them. And to top it off, Rachel Reeves is eyeing up a new tax that could hit landlords hard. Let's take a look at what's happening in the mortgage market this week. This week, we've got a mixed bag from lenders. NatWest, Santander, Coventry, Accord, and April Mortgages are all increasing rates, while Leeds and Principality are actually cutting some. On top of that, we've got big news for landlords with talk of national insurance on rental income, and if that wasn't enough, the energy price cap is going up again. Buckle up, because this all feeds into what happens with mortgages next. So let's start with the lenders. NatWest are increasing rates across all product ranges. Santander are making only slight increases, but they're still going up. Coventry Building Society are raising all their fixed rates, even at lower loan-to-value levels. Accord are upping rates on both residential and buy-to-let product transfers. And April Mortgages are pushing rates up too. But it's not all bad news. Leeds Building Society are trimming some of their residential and buy-to-let deals, and Principality are also cutting quite a few, with only very slight increases elsewhere. So what does all of this tell us? Well, lenders are still jostling for position, really. Some are preparing for higher funding costs, while others see the opportunity to grab some market share. Because you see, mortgage rates do fluctuate up and down throughout the year, regardless of what's going on in the economy or with the Bank of England base rate. This happens for many reasons, but partly because they want to manage their workflows, grab a little bit more market share on certain loan-to-value transactions, and generally adjust where they sit in terms of pricing compared to other lenders, which dictates whether or not they get more or less business. So rates do fluctuate an awful lot throughout the year, but these more recent increases that we're starting to see are because swap rates are on the increase based upon the back of bad economic data. But please do let me know in the comments if you've spotted any really standout rates this week, because I'd love to hear what you're seeing on the ground as well. Moving on to landlords. So Rachel Reeves is considering imposing national insurance contributions on rental income. The idea is to raise about £2 billion to help plug the UK's public finance black hole. If this goes through, landlords could face yet another squeeze on top of higher mortgage costs, licensing rules, and EPC regulations. For many, this is likely to mean passing the cost on to tenants who are clearly already struggling. And of course, this only adds more pressure to the rental market. Now, if you are a landlord watching this, would a tax like this make you rethink ownership of buy-to-let properties and perhaps your wider portfolio? Or do you see it as just another cost of doing business? Please let me know in the comments. Moving on, it was announced this week that the energy price cap is rising by 2% from October. That doesn't sound like much, but with inflation expected to peak at over 4%, which is more than double the target, this is just going to add to the problem. At the same time, gilt yields, which is basically the cost of government borrowing, are at their highest levels since 1998. For context, that means it's more expensive for the government to raise money. So, of course, they are leaning more heavily on tax. Some economists and news outlets are even drawing comparisons with the 1976 crisis, when the UK had to go to the IMF for help. Now, we're not there yet, but it does feel like we're heading into a bumpy ride with more tax rises on the horizon. And as for those additional rate cuts that we were expecting from the Bank of England, well, for now, you can wave those goodbye. So what does all of this mean for borrowers right now? Well, for home buyers and remortgagers, the market is still volatile. Rates are moving both up and down, which means that shopping around is more important than ever. Please don't assume that your current lender is your best option, but equally, don't panic if you see headlines about rate hikes, because there are still some competitive deals out there. For landlords, though, the tax threat is very real. Even if it doesn't happen, it shows the direction of travel. More scrutiny and more pressure. If you're a landlord that's heavily leveraged, this could be a time to review your position. And for everyone else, well, the wider economy is very shaky, as we've been saying for a few weeks now. Inflation isn't under control, and government borrowing costs are increasing. That uncertainty is feeding into mortgage pricing, making it a very bumpy ride. So in summary, lenders are split, with some putting rates up and some cutting. Landlords might be facing a fresh tax hit, and inflation is still looking sticky, with energy costs rising. What would you do in this market? Lock in now, or wait to see if rates do fall further? And do you think these new tax proposals are genuine policy direction, or are the government just floating ideas to test the public's reaction before the autumn budget? I'm really curious to hear your take on this, so please do, as always, leave some comments below. Anyway, if you found this video useful this week, please do hit that like button, consider subscribing if you don't already, and please share this video with anybody that's interested in this kind of news or the UK mortgage and property market. As always, thanks for watching and supporting the channel. It really is appreciated, so thank you. But for now, I'll see you in next week's update, where no doubt there will be even more twists to cover. Take care.